Hello everyone and welcome to this afternoon, well it's afternoon here in the UK for us, a webinar where we will be looking at the markets, primarily the futures, some commodities, and I'll be doing Forex as well. But wherever you are in the world, you are very welcome to join us for the session. But before we start, as usual, please can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Right, very quickly, I know I can see we've got some people in with us today who perhaps they come for the first time, may not be familiar of what we'll be doing, how and what the session will involve. Essentially, what we look at are the charts through the prism of volume price analysis. This is the book that explains it, which is up on Amazon, and it's looking at a chart. Price action, obviously, but also volume to tell us whether the price move that we are seeing is genuine or not. But VPA is more than that. It does encompass other elements, and there are 5 basic principles, if you like: price action, volume. Support and resistance is hugely important, candle and candle patterns, and time in the sense of multiple time frames, but also we look at the chart also through the prism of volume, price, and time. In other words, price action and volume over time. And we've developed a special indicator for that called the volume point of control, which has its kind of resembles what also goes on with market profile. But really, the best way to see all this is the charts in real time. We tend to use the faster time frames simply because we want to see the price action develop. But what there's one takeaway you have to have, and in that this methodology is applicable not just to the faster time frames, but also to all time frames. If there's volume on the chart, then you can apply the principles and the methodology. And what we've done as well with the original book is that it has an accompanying a companion book of actual examples from. This is the one that covers the indices, stocks, principles. It's got some commodities, and there's also a version for Forex. So that's what I'm going to say. If you have got any questions on anything that we're going to cover, or if I know we've got some of our quantum users here as well, those of you who have bought our specialist tools that David and I developed for ourselves and now are available to other traders. And I know we've also got some of our Forex program students here as well. So whichever category you fall into, if you've got any questions about anything, please just pop them into the chat box and we'll be more than happy to answer them for you and share the answers with everyone on the session. These are recorded, these sessions. What we do is we used to put the whole session up in one on YouTube, but it was just too long. So what we tend to do is we chop them up, and so we make them into sort of 15-minute videos on the different topics that we are going to cover. Right, very quickly, as you know, obviously we've had non-farm payroll today because tomorrow is the beginning of the weekend holiday for Independence Day, the 4th of July, which is obviously on Saturday. So the markets generally, I did read somewhere, someone sent me a little note about this, that historically the markets like to end on a positive note just before this big holiday. So in a way, is it surprising, that we're seeing the markets do what they do? Also, the non-farm payroll numbers, as we quickly have a look here at Forex Factory, the number of jobs came in higher than expected. The unemployment rate is lower than expected. The unemployment claims have gone up. Sometimes these numbers can be a bit contradictory, but you really have to dig into them. The one that you have to look at as well is the average hourly earnings. There's a whole, there's a whole industry developed to the NFP. As a day trader, regardless of what you trade, whether it's an index, a stock, or a or Forex, basically it's the market's reaction to these numbers. It's the algos will be reacting, and obviously individual traders, whether it's a good report or a bad report, you have what I call the knee-jerk reaction, the volatility, prices going all over the place, and then you get the fade. Then people step back and say, yeah, fine. And as an intraday trader, you have to make that decision as to whether you are going to trade the release itself, bearing in mind that your broker, and certainly this is true for Forex, there are certain brokers that the spreads widen so much, it's almost impossible to place a trade. So you either then have to say, okay, I'm going to take a punt on this, I'll put a limit order in. If it goes my way, fine. If not, that's fine. Or you wait till everything dies down, see where once the dust has settled, look at the charts, look at the price action, look at the structure of the chart, see what's left, if you like, after the volatility, and make a decision. Take a decision after that. Fading it if once the volatility has died down. If you've got open positions and maybe you're in profit, well, it's up to you. Certainly, if it were me and I've got multiple positions on and I'm in profit, I would take some off the table. If you want to leave one on for sort of speculatively, fine, that's up to you. But again, you really have to be careful with your stop loss. Sometimes, as I said, if there's a lot of volatility, stop losses may not be respected, in which case you think, well, you're going to take that risk, or do you go for a guaranteed stop loss? So there's no right way or wrong way to trade these major events. Going back to what's in terms of sentiment, we can see here, well, the Nasdaq is certainly rampaging, higher. The Dow Jones is up 200, the S&P is up as well. We're going to look a little bit more closely at these charts using through the prism of VPA. And really not everything is as it appears, but if you're a day trader and you're trading the faster charts, you trade what you see on the chart, because it's very easy to look at a market and think it's at an all-time high. Well, it can't possibly go any higher. It can't possibly. I'm going to short it. There are the trading world is littered with traders who have opinions and have lost money because they have in the back of their mind this little voice that says it can't go any higher, it can't, I've got to short it, I've got to short it. There are opportunities to short, but overall this market does not want to fall. It's in a state at the moment where, yeah, we have the fundamental data, but it's, if you like, it's a battle now between the virus and and the vaccine. The vaccine, even I think I just noticed on the news scroller that Trump has said, oh, there's a vaccine very soon. In fact, I've got some couple of things about vaccines. This is possibly what you should certainly keep on your dashboard. This was from yesterday. I think this was also one of the reasons given why there was a further burst higher, particularly for the Nasdaq. But, it is what it is. Who knows? Please God, we do get a vaccine. We certainly don't want to carry on living under the conditions that we are at the moment. There are people, millions of people who've lost their jobs. We would like our lives to return to some kind of normality. What that normality is, we don't know, but it's certainly got to be better than it is at the moment. You can set up a Google alert, a virus vaccine, and you will get the latest data. When will you know? This is what the market is waiting for. And on the other hand, you have the numbers that keep coming in for the states of the various states in America. I think Arizona is the one, according to Forex Live. That's kind of a key one at the moment. So here is 3 vaccines looking good. And of course, you've got the Fed. The Fed is there, with its old printing press going like the clappers at the moment, not wanting to, to take this market down because of all sorts of reasons. Why not? So this is the trading environment that we are working in at the moment. Now, all-time highs. Whenever anything arrives at an all-time high, it is you have fear. You have three types of fear. You have the fear of missing out. You have the fear that you have missed out. Maybe you missed the trend higher, so you're now fearful that, oh, you've missed out. But there's also the fear that if you're in and you've got in, when do you get out? Because you want to maximize it, but you don't want to lose what you already have. And it's really curious, because when something is at the top and we're doing well and things are going in our favor, the overall emotion is fear. And yet when things are against us and maybe we're in a loss and, we watch the charts and we go deeper and deeper in a loss, the overriding emotion is not fear, it's actually hope. Because what we do is we hope that things are going to turn around. So what can we do? VPA will certainly give you an indication of whether we are coming to a point where there is possibly going to be a major reversal. And for that, you have to look at the slower time frame charts. Support and resistance levels that are created as the instrument. I've got the NQ because the NQ is the one that is rampaging higher and is the one that is certainly at the forefront of traders, investors' mind, the media's mind, etc., etc. Where is it going to? And there are all sorts of metrics that traders and investors employ to try and give them a feel for. Not only is it about to, correct, is it going to go into, say, a massive fall, but is it going to stop rising exponentially and possibly go into some consolidation prior to maybe a distribution, or possibly build a platform of support? Or, what other metric can you use? I even read somewhere that I don't use the 200 MA, but, I respect the fact that a lot of traders and investors use it. And I read on my Twitter feed that apparently it is now about, it's 16% above the 200 MA, and it is the point, almost the same point at which when it reversed the last time. So let's pull it up here. It's probably easier. This point here, at the point apparently it was about 16% above the 200 MA. The 200 MA has obviously moved up. It is now at this particular level as well. So we've got volume price analysis to tell us what's going on a daily basis, obviously on the longer time frame charts. But what we've also done to help us with our VPA, because I would also like to know where this market is going, not just the NQ, but the other in Forex, the pairs that I trade. We have come up with, as I said, we've got support and resistance levels, which you can see on the charts. I don't have them on here. What I have here is our Camarilla. Our Camarilla indicator, obviously based on the Camarilla protocol, but instead of 4 levels, we actually have developed the indicator for 6 levels. But what we've also done is we've taken it one step further. We have created this indicator in the sense that it gives you different levels in multiple time frames. So it's not just one set of levels that you simply apply across the time frames. They're very, very specific. So for example, on the charts up to the hour, but not including the hour, these levels are updated every time, every new trading session. So they will, whenever the market rolls over this evening, so tomorrow, although the market I don't think is trading tomorrow, but the next session you will have a fresh set of levels. What's interesting on this is my 10-minute chart is where the Nasdaq has paused, where it has at the moment seems to have a little difficulty of moving higher, and it's at the R4. I suppose the fourth resistance and fourth support level are quite key in this 6th level indicator. It's here, in the classical Camarilla, once the price had got through R4, it was considered a valid breakaway. It always has a bit of a struggle at the R4 and the S4. Sometimes it goes straight through, but it will often test it, retest it. A lot of traders actually just trade against it, and you can see, if you have the indicators, how many times it actually reverses before going back up again. And even when it goes through, it will often retest it as well. But if it goes through, where is the next point? Well, it goes to the R5, and then we have the R6. But look at these key levels that have come up. It's 10,400. The other thing to bear in mind with all markets is the numbers that are around a 0 and a 5, these big round numbers are hugely significant and hugely important. And it tends to be, if you use order flow as part of your set of trading tactics, you will often find that's where the big orders are sitting. Well, certainly they do in Forex, and certainly they do in futures. I mean, traders are lazy. They're not going to put odd numbers in. They're going to use the big round numbers. So, and when it coincides with a significant level, as it is with the R4, perhaps it's going to have a little bit more of a struggle. So those are the levels we have here, certainly on an intraday basis. And as I said, these will be updated later on today, and we will know where we are. When we go up to the 60-minute and up to the day, I'll just do this, and I have to put a few more increase the data series here, because 5 days is not enough, so I'll just put 100 days in. So when I go here, what this tells me, this is very interesting. Now, these levels that are on the 60-minute chart up to and including the daily chart, these are the levels that have been in play for the whole week. So these are being calculated on a weekly basis. And we can see here that actually the NQ has actually sort of broken out. It broke away, as you can see here on the R4, if you scroll back over here, it kind of, this is for, it spent a lot of time in this, in this area here. It did finally break away, lots of volume underneath it. Then the volume dies away. This is where your VPA comes in. Then we had a little bit more of a consolidation around the R5. It went through that as well. And it now looks as though it has managed to go through the R6, but it has actually tested the R6 level again. But we know when we go down to the 10-minute chart, because we have a confluence here, there we are, we know why we've got this pause, because you use these in multiple timeframes, and when these levels coincide on significant levels across the timeframes, that level becomes, if you like, even more significant. But we've taken this one step further, because if you go up to the weekly chart, and this really, this is when people, this is when you get into, you've got nosebleeds up here, and people get really panicky, and this is going to the moon, it's going to the moon. Well, it'll go wherever it'll go, and it will stop when it will stop. First thing to notice is this is the size of the weekly candle, but look at the volume underneath it. It's really not terribly impressive compared to the range of this candle. But what's significant are the levels. We've got 10.5 at the R5, and I don't know where the R6 is, because I think I'm going to have to put the box on it. There we are. Where is it? I think it's practically on. Well, it's 10.725. I have actually got even levels that go even further out, but I'll keep those for another day. And I've actually got 11,000 on there. It's not saying it's going there, but it gives you a sense of, so that if you are in this and you're looking at it, this is what, at least from a price action perspective, this is what the chart is telling us. Doesn't mean it's going to get there, but it's a potential target. Whether it gets there, and if it's a genuine move higher, that is going to be confirmed by what you see on the volume. And as I said, certainly on the weekly chart, the volume is certainly not consistent with the spread of this candle. But we do have to bear in mind, markets doesn't want to fall, wants to be marked up higher. News, vaccine, the news about, that's trickling out about a potential vaccine, and hey, who doesn't want a vaccine? We don't want to live in this state for the rest of our lives. This is a horrible, horrible, virus. If you are afflicted by it, we've known people who have, through other people who have sadly lost their lives. People who, not because they had any other condition, it was just very, very unfortunate. So, why not? If anything that can bring an end to this very strange and surreal time, that we are living in at the moment. So having the levels at least should dispel some of the fears that are, you know, maybe sort of swirling around, certainly if you're in it, or, you know, if you've bought on the V-shaped reversal. Fantastic, well done. VPA certainly would have signaled that V-shaped reversal. And if you're sitting there and you think, well, where's it going? Where's it? At least having these levels, at least it's pointing you in one direction. Now, what's also interesting, you say, well, okay, if it does reverse, because they are equally important, going in the other direction. And really, the one that I've looked at is and it's also borne out with the support and resistance that we have on the charts, and that is around 10,000. 10,000. There is a really nice support platform in that region. But you know, when David looks at the chart later on, perhaps you'll have a look at that, David. Is that okay? Yeah. On the 10,000. That's what I've seen on my charts. But you know, hey, so that's just a broad summary of where we are at the moment, what you should look at when something is at an all-time high, where is it potentially going to at the moment. And as I said, look at it in multiple time frames, look at the price action and the volume that is, you know, it will confirm whether it is actually going to get there. And if it doesn't get there, well, the levels will tell you where it is likely to stop on the way down.